Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in lovely Lauderdale by the Sea. Nice day out there, as you can see. And here we are for our January 21st, and it looks like around 10 a.m. approximately, update on precious metals, and we'll talk about some other news and stuff. Let's move over to Zero Hedge here. By the way, you can get Zero Hedge for free, so you just go to zerohedge.com, obviously, or you can pay $1 a day and get it without advertising. I suggest you get it without the advertising. One of the things I like about ZH is that they provide all kinds of different viewpoints from left to right to middle, and you can make up your own mind what you want to read, unlike a lot of corporate publications, unfortunately. Anyway, let's just kind of take a look at headlines. I did find one headline on here, but political. And as we go down here, I saw this Bitcoin breaks below 32,000 as ETH froth evaporates. I'm not quite sure what that means, but remember we've been talking about whales and what they're going to do. You know, a lot of people in the crypto markets were so happy when the big companies came in, but they didn't realize they invited in the big whales. They're going to eat them all. And unfortunately, we see that in the gold and silver market with the manipulation and the monkey hammering. And I think that the Bitcoin market is going to discover that as well. At one time, you had it all to yourself, guys, and then you invited in these people. And again, you know, whales eat small fish. Well, not necessarily, they eat krill, but big fish eat small fish. And when you invited the big fish into the crypto markets, and you're a small fish, chances are you're dinner. But still, I'm sure that if you know how to play this game, you can make money on it. And I am a pure capitalist, so you know, if you're making money with Bitcoin, keep doing it. But it looks like it broke below that 32,000, and wow, that's some volatility, man. A crazy way to make money, and maybe a crazy way to lose money too. I'm not quite sure, but it's definitely not money. Let's move along to another headline. Again, you can read this on Bitcoin. You can read this for free on Zero Hedge. As I said, I'm looking at the premium page here, which gets rid of the advertising and is much easier to navigate. And it's only $1 a day. But again, you can read any of these articles that we're looking at here for free on Zero Hedge. Let me go down here and see if I see anything else on gold. I did on the second page, and rather than pop over to the second page, I got it saved on the next page here. But another little headline we'll take a look at here, and you can read yourself. 900,000 Americans filed for first-time jobless benefits last week. This does not bode well. You know, I was waiting for the economy to really take a giant dump, quite honestly, in the stock market, and I've been waiting for another 2008 type environment, but even bigger, because they've made it even bigger, and the bubble is even huger than it's ever been. They've thrown endless money at it, and I'm really surprised it didn't happen under the last administration. You know. And I just can't help but feeling, and again, never underestimate the people that can print money, but I just can't help but feeling, especially with Janet Yellen saying that she's going to just throw more money at it, more money, that we're going to be in some serious trouble, and that it could very well be this current administration that sees the economic collapse and something that makes 2008 look like a cakewalk. Gosh, I hope not, but it's sure looking that way, and that's a good reason to own gold. And then when you see that happening, and you read headlines like this, the first week into the new year, that almost 1 million Americans filed first-time jobless benefits. It's not good, folks. It's not good. Again, this is the reason you're listening to this show, because I'd rather be at the beach than talking about gold and silver, and I'd rather have a really healthy economy where everybody's making money and we didn't have to worry about buying assets to protect our money. But unfortunately, that's where we're at today, and that's why we're doing these kind of shows, and that's why we buy gold and silver. Let's take a look down here a little bit more. Jack Ma, you know, he disappeared for a month or two, and then now it looks like he showed up again, but apparently he got a little bit too big for his pants, and the Chinese Communist Party has taken Jack Ma down a couple steps. Looks like they're going to tear his companies apart, and well, anyways, I don't know what that has to do with gold, but I do remember when we had a huge jump up in gold back in October, or what was it? Yeah, I think it was end of October, beginning of November. We had a good $100 up day, or even higher for gold. I think we were above that $2,000 mark for a little bit, and it happened so quickly. And if you remember one of the shows that I was doing, I found out why it happened, because all that money that was going to go into Jack Ma's new IPO or whatever they were doing in October got nixed by the Chinese Communist Party, and that money went somewhere, and a good portion of it, some of it, not a good portion of it, but a small part of it went into gold, and really caused the gold prices to fly up pretty fast. And then he disappeared for a couple months. Looks like he's back. He's on the scene again, but probably more humbled and afraid. Let's see, look here, Black Hawk down. Nothing here about gold. And let's move along to that gold article I told you I was going to found on the second page rather than just skip into it. Litkanen, I guess from realinvestmentadvice.com. I have to take a look at their site sometime, but again, remember, a lot of the articles you see here on Zero Hedge are from other bloggers and other corporate media. So this is from realinvestmentsadvice.com, and this gentleman thinks, and I think correctly, and I didn't want to butcher his name, but I think it's Litkanen, Litkanen or something like that, and forgive me if I did. But anyway, Eric, his name's right here. I concur 100% with you most of this. 2021 marks the 50th anniversary of President Nixon's decision to suspend the convertibility of U.S. dollars into gold. And as you watch this show for the last 7 months, we've talked about this 100 times. At that time, gold was just $35 per ounce. As we approach the August 13th gold anniversary date, a review of the past 50 years is worthwhile. Gold could see $25,000 in 10 years. Wow. But, does that mean a gallon of milk is going to be 75 bucks? That's the question. It's all kind of relative here. That's really not the environment that we want to live in, but it's the reason we own gold and silver again. The two big rallies occurred roughly over 10-year periods. Both saw dramatic increases in the value of gold. From August 1971 to 1980, which was really the first big bull market. But you got to remember, in the scale of things, that market was huge. The dollar, bought so much more back then than it does now. So $50 silver in 1980 would be like $500 silver now. I don't think I'd be exaggerating. $800 gold back in 1980 would be the equivalent probably to $8,000 gold now. So, and again, not exaggerating. They were kind of different market too. Anyway, a lot of it had to do with economic, and the silver market had to do with the Hunt brothers somewhat too. And we'll talk about that story one day. I'll get into the story of the Hunt brothers. Not many people know the true story of the Hunt brothers. So let's move along here. So 71 to 80, we had $35 up to $700 per ounce, which was huge. Please note a significant pullback from $200 to $100 per ounce during this time, a 50% drawdown, even in a bull market. And that is correct. During that period, there was a big drawdown, and then it shot back up again. And I think we've seen that recently here as well with our current market. One might say there was a great reset of the financial system in 1971, which has moved the world past the Bretton Woods Agreement. Again, if you're watching my show, we've been talking about this for several months as well, about 100 times about the Bretton Woods Agreement. In fact, I made it your homework a few times. And we got some homework here in a little bit that I'll go over. Tech bubble bursting in 2001. Here's our second in my lifetime. Here's our second bull market in my lifetime. Following the bursting of the tech bubble, the gold price again rallied over 10 years, which is absolutely true, up to 2011, 2012, where it kind of bubbled up and then it burst. The tech bubble followed by the housing bubble 2007 and 2008, which you guys remember, and the great worldwide crash of 2008, another economic reset. And I guess you can say that the economic reset of Nixon taking us off the gold standard and getting rid of the Bretton Woods Agreement was the partial catalyst for the first bull market. So here we go. Regardless of whether we are at the cusp of a new monetary paradigm, the case for increased allocation to gold is compelling. Well, he's just saying why we should buy gold, and we already know that. But anyway, I'd recommend you read the article. There was something else he mentioned down here. Where is it? Final thoughts. I like his final thoughts. We are very bullish for gold over the next 10 years, and we'll be looking for good entry points for gold, silver, and I don't know much about gold miners, but they're talking about gold miners. For me, real quick, let me just tell you, when it comes to gold miners, remember you're buying the company, not necessarily the gold. And companies can be run poorly, and companies can be run in the ground, or they can be put out of business by environmental reasons or whatever. But remember, gold miners are very risky, but you can make a huge amount of money in them. But you're not buying gold, you're buying the company. So let me move on there. I didn't mean to digress. We will not be surprised to see $25,000 ounce by the year 2030. It will likely be a volatile ride higher with large drawdowns on the way. But again, folks, remember, what does that really say for the dollar? What if it takes 25,000 $1 bills to buy an ounce of gold, how many $1 bills will it take to buy a loaf of bread or a gallon of milk? That's the question. It's all relative. You have to remember, but the reason you own gold and silver and precious metals, don't think you're getting rich, by the way, if gold's at $25,000 an ounce 10 years from now. I mean, you've preserved your money well. Trust me, you've probably done way better than a lot of people. But you know, if gold's $25,000 and you're paying $75 for a gallon of milk, it is kind of relative, folks. Remember that. Never forget that. Well, let's move on to another. Hey, speaking of $75 gallon milk, that was my lesson for the day I was going to talk about. We're going to go over it real quick because people talk about this all the time. My gold and silver stackers and my gold peeps talk about hyperinflation, the printing of the dollar, and what hyperinflation really means. And, well, there's a good visual example of hyperinflation. And, of course, a lot of you folks that are a little bit older, baby boomers and older, and maybe not quite baby boomers, but remember the old story about the guy going to the store to buy a loaf of bread with the wheelbarrow full of marks, and the guy selling the bread says, well, I don't want the marks, but I'll take the wheelbarrow. So there you go. The wheelbarrow is worth more than the whole wheelbarrow full of German marks, which were the equivalent to dollars then. And that's kind of what you had in Zimbabwe. This is hyperinflation at its freaking worst. This is the most recent example Zimbabwe was of what hyperinflation really looks like. And there's a good representation, folks. That kid's probably holding enough dollars there, or enough Zimbabwe dollars to maybe buy himself a candy bar if he was lucky. Maybe not. Let's read what hyperinflation is, and I'll make it real quick, and then we'll get into the gold prices. Sorry for the delay here. Hyperinflation is a term to describe rapid, excessive, and out-of-control general price increases in the economy. While inflation is a measure of the pace of rising prices for goods and services, hyperinflation is rapidly rising inflation, typically measuring more than 50% a month. So, until you start to see the things that you buy rise 50% a month, you are not in a hyperinflationary state, folks. We are in an inflationary state, or should I say our currency is deflating. So we're in a currency deflationary kind of thing, which causes this as well. Let's take some key takeaways. I love Investopedia, by the way. Use this whenever you're doing anything with investments, gold, silver, platinum. Use Investopedia. Do not use Wikipedia. That's just my opinion, but Investopedia is so much better. They leave their political opinion out of it. Wikipedia does not. Wikipedia does have its uses, though, I will say. Key takeaways with hyperinflation is a term to describe rapid, excessive, and out-of-control price increases in the economy. We just read that, 50% over a month. Hyperinflation can occur in times of war and economic turmoil. Well, here's us, economic turmoil, and the underlying production economy in conjunction with central bank printing. And here we are right here. This explains our situation since 2008, and actually much earlier, but we've been in an accelerated form of printing is what we've had happening, and it's going to get worse the next year and maybe the next 2 and 3 and 4 years. I don't know where this ends. But according to Janet Yellen, for the next 4 years, we're going to have excessive money printing. Will that lead to hyperinflation? Well, I hope not. But in conjunction, here's the key word, with central bank printing in excessive amount of money. We have that, and that is that. Hyperinflation, or can cause hyperinflation, I should say. Not necessarily is that. Hyperinflation can cause a surge in prices for basic goods, such as food and fuel, and they become scarce. Hyperinflations are typically rare, and they are, because, I mean, how often have you seen this picture other than Zimbabwe? Not often. So they are pretty rare, and we hope they don't happen. You can have an inflationary state that's not hyperinflation, but when it starts going up, 50% each month, Yeah, that's hyperinflation, folks, and you should be very afraid at that point. But we haven't seen it, so don't be afraid. We're in a slow deflationary rate of the dollar. The dollar's losing value over time, like it always has. It's going to be accelerated for the next 4 years for sure. Let's read Understanding Hyperinflation real quick. And I'm going to get over this. I don't want to spend too much time here. But imagine the food costs, the cost of food shopping going from 500 weeks to $750 per week in the next month, to $11.25 per week the next month, and so on. If wages aren't keeping pace with the inflation in the economy, the standard of living for the people goes down because they can't afford for their basic needs and cost of living expenses. Well, we are not in a 50% a month. We're not seeing our food costs going from $500 per week to $750 per week the following month. So we're not seeing those 50, but we have seen a slow decline over the last 20 years since Nixon took us off the gold standard, and the decline has accelerated and gotten worse since 2008, and it's going to continue to get even worse from this point on, because they've already said they're going to just print, and try to print their way out of this. Hyperinflation can cause a number of consequences for the economy. Anyways, your homework, folks, is I want you, please, to go read what hyperinflation really is. And actually, it's a pretty good article by Will Keaton and reviewed by Charles Potter. It's on Investopedia. And if you got any other terms that you want to know about, hey, use Investopedia. It's a great source. Again, way better than any others that I can find out there. Let's take a look at something else that's real important that you have to consider when you consider inflation and hyperinflation, and that's the Consumer Price Index. Over the last 12 months, it looks like our cost, food, has gone up. So this is inflation, folks, or currency deflation is what it really is. But this is major categories. Food is up 3.9%. So you did see your, not 50% a month, but you did see your food bill go up minimum 4%. Energy costs down. Well, that's, no travel, people aren't driving around as much. Of course, energy costs are going to be down. Major categories, all items less food and energy, inflation is up 1.6%. Major categories, blah, blah, blah. Well, anyway, CPI is very important. And what is the CPI? The CPI is a measure of the average change over time, the prices paid by urban consumers for market basket of consumer goods. And there's people that question how valid this data is because they only cherry pick their data from certain things. But more or less, it's just saying, what you paid for your average bag of groceries from one year to the next year. How much did it go up? And we all know that it's hard to notice these small changes, but if you do 1%, let's take a look here. If food went up 3.9% every year for 10 years, your food costs went up for 39%. And if your wages didn't go up 39%, and we all know wages have not gone up 39% in the last 10 years, then you are absolutely spending a lot more and making a lot less. And this is the situation we are in, and going to get worse. Hey, sorry to make this such a long report, but I think there's some important things for some of us to learn here, or to be refreshed on, including myself. And when I'm talking to you about this, I'm learning myself too as well, or refreshing myself. Hey, let's take a look at spot prices, see what's going on. While I click there, I'm going to take a quick sip of coffee because, man, anyone ever try to talk for 15 minutes straight? Or however long this show is? All right, I didn't refresh this for about 10 minutes, so let's do a quick refresh here and see what happens. Sorry about that. Market's back up. It was 62 when I last refreshed, but let's just take a look at the overnights. It looks like it's down $5.50 from yesterday and 4 cents on silver. Let's look at the high and low because I'm not too concerned about where it's at right now. I just want to see the low and high between yesterday. A low of $18.59, so basically $18.60 and a high of $18.75, so trading in a $15 range. It's been doing that for the last week or so, it seems like, and silver is really holding very well. I'm very impressed with silver. Look at the range there, 25.67 to 26.07. So, I think that the little speed bumps that we saw for the last 3 or 4 months, we're going to see some more, but maybe not as much. And I think we're going to see some more steady climbing as opposed to those big jumps. But who the hell knows, man? It's just crazy times. Meanwhile, my prediction is when it comes to predicting short term, and if you're a day trader in gold and silver and platinum, here I got a big tip for you. I don't have any clue on what to tell you to do on a day trading basis. These markets are completely confusing to me, even though I've been looking at them for like 40 years now on a daily basis. But as far as medium and long term, man, if you're holding gold right now, you are golden for the future. Trust me on this. It's a good place to be. Anything below $2,000, in my opinion, is a steal in gold, or you will look back on it that way, just like we look back on $1,000 gold as a steal. And you'll look back at sub $30 silver as a steal one day as well, and maybe even way higher than these numbers. So trust me, you know, gold and silver, the two things you will never have to worry about. You'll never wake up and you'll never hear that it went broke. And as long as you got it in your hand, you don't have that third-party risk like you do with almost every investment out there now. So it's a good thing to own in your hand. Anyways, as I always suggest, buy local if you can. We are a local coin shop and precious metals dealer. We only deal face-to-face. We don't do any online sales. And if you can find someone like that locally, I recommend the same thing if you don't live in my area. Find yourself a good local dealer. Keep that money local because, hey, we spend it local as well. And I am just as competitive, if not more competitive, than the guys online. And I suspect that you may have a local dealer around you like that as well. Nothing to say bad about any of the online dealers. It's just if you can keep the money local, do it. So check out your local dealer, see if he'll match or beat any of the prices that you're finding out there online, and I'm sure he can. Anyways, best products out there still are maples, because Kruger Wrens are just not available still. Maples are readily available, and the next cheap popular product, not cheap, but cheaper premium popular product. Gold Eagles are still overpriced in my opinion, but we're getting limited on our choices right now. So if maples kind of tighten up, we're kind of stuck with just buying Eagles. I don't know what's going on with this shortage with 1 ounce products too. It's kind of baffling to me. I think it's just big demand because we've just been selling the hell out of it here ourselves. I can't keep gold in stock. It's just when I get it, it's sold before I even get it in the mail, folks, because we take orders also. Crazy time right now. Hard to figure out. Anyways, this is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811. And happy to help you out with your gold purchases, what spot prices are, and all kinds of other things. Hey, make sure to check out my other videos. I've got some good educational videos besides these daily videos that I do every day, 5 days a week. I've got some educational videos, and I got a great video coming out this week on why I do not like to buy silver eagles, or gold eagles for that matter. So please check that out, and also make sure you subscribe to my channel if you haven't, and hit that like button. Always nice to see. Hey, thanks for watching. Have yourself a great day, and if anything crazy happens, I'll do a second report. If not, talk to you tomorrow.